Hey, what's going on, guys? Welcome back to my channel. So in this video, I'm going to be talking about JM Smucker, ticker symbol SJM. Basically, so the reason I came across them at this point was because I was looking at stocks that have consistently increased their dividends year after year, and I was taking a look at how long that streak is. And that streak, again, is consistently increasing the dividends every single year. So I'm here, drinking my nightly chocolate milk, and I come across J.M. Smucker here at 22. So they are 3 years away from being a dividend aristocrat. Obviously, for a dividend growth investor like myself, that's kind of the holy grail of the companies you want to be looking for, right? Because 22 years means they've started increasing before the dot-com bubble, and so basically what you have is a whole bunch of companies here at 18 and 17 because that's basically when the dot-com bubble ended, and so they were able to start increasing their yields. But anything above 20 years, most of the time means that they were able to sustain through two recessions, and so that means a lot. And so I came across James Smucker, and the other thing about them is that they're not really regarded in the same type of quality that other consumer packaged goods stocks are, I would say. Now, obviously, when we think about CPG, we think about Procter and Gamble, we think about Clorox, maybe we think about Colgate, maybe not so much. We think about Unilever, obviously, we think about Kimberly-Clark. Um, but none of these are food stocks. And so maybe food stocks just aren't regarded that well. So what I did was I took a look at James Snucker's stock price. And as you guys can see from the chart, they've kind of gone nowhere since I would say 2016, where they made a really nice rally here towards the end of 2016. But after that, they cooled off a bit and kind of just went nowhere. But this actually excites me from a technical perspective. This looks like a kind of bottoming pattern, I would say. Something like a double bottom printed here. And I won't get too into the technicals. Actually, I don't even have moving averages on this chart. I just want to say this is a stock that's gone sideways, but from a technical perspective, I kind of like this. And so after looking at the stock price, I was like, okay, what is the consensus on, James Smucker? Like, are they a company that analysts like or don't like? I found more bearish articles or neutral articles on James Smuckers than I did bullish articles, which is actually kind of interesting because if you're looking for like a stock that you're considering buying, um, most people either tend to be bullish. Maybe it's because they naturally are bullish, or it's because that's kind of the stuff that's clicked on easier, and so it's easier to find bullish articles. Whether it's one of those two things, generally, if I'm looking at like a blue chip company, maybe not blue chip, but just like a large cap company, it's easier to find bullish articles than bearish, in my opinion. And especially not a company that shouldn't really have that many stains on it, right? And so let's go ahead and take a look at some of the investor or analyst criticisms. And so this was criticism number one, which is Smucker has poorly positioned brands, even in its more attractive categories, and continued market share losses will plague the company. So first, let's go ahead and take a look at the brands. But after we do that, I also want to verify whether this is true or not, right? Because, well, market share is something that we can't really quantify that easily because we would have to have data of whether it's the retailers or some kind of something that's tracking online sales, like alternative data or data from these other competitors, that's just going to be super hard to find, right? So we won't be able to do that necessarily in terms of market share, but we will look at brand performance. Like I said, first let's take a look at James Smucker's brands. And so I'm here looking at James Smucker's brands. So Uncrustables, obviously. You have Milk-Bone, which is a pet food brand. You have Meow Mix, which is a cat food brand. I kind of almost laughed saying Meow Mix for some reason. And then you have Jif, peanut butters, Folgers, coffee, and then Smuckers, Robin Hood, which is also snacks. It's not just a brokerage. Um, but yeah, so they pretty much have three main food segments, I would say, which is coffee, consumer goods, pet foods, and snacks. And so let's go ahead and take a look at their coffee segment. All right, so this is their coffee segment. Surprisingly, Dunkin' is actually owned by James Smucker. There's also Folgers, which is probably the most recognizable out of these. And of course, there's some other brands which maybe some of you recognize. I don't actually recognize most of these, if I'm being completely honest myself. And so now we're going to take a look at their consumer food brands. So some of these are probably more recognizable. So you have Adam's peanut butter, you have Carnation, which is like sweetened and condensed milk. You have Crisco here. You have Jif here, which is peanut butter. You have Knott's Berry Farm, which is jelly. And then you have Robin Hood. And then you have Santa Cruz, which is like lemonade and soft drinks. And then you have Uncrustables, which is a pretty recognizable brand. And then you have Smuckers. And so you guys might be able to recognize more of these than I do, but those are pretty much the main ones I would say. And then now we would look at the pet food brands. I'm going to try not to laugh. I just saw Meow Mix here. But yeah, so you have Meow Mix, you have Milkbone, you have Pepperoni, that's a cute pun, and then you have Snossages, another cute pun, and then you have Rachel Ray Nutrish. So once again, I don't actually own pets. Oh, you also have Kibbles and Bits. So I don't actually own pets, so maybe some of you guys recognize more of these than I do, but these are pretty recognizable brands as far as I know. Like I always see some of these if I'm walking down the pet food aisle. And so now you might be wondering, okay, how are these different segments of food actually performing? And so we'll take a look at it at a top level view first. So surprisingly, pet foods actually makes up 37% of their net sales. Retail coffee is second on the list at 28%. And then the consumer foods is actually 22%, which is kind of interesting because when we think of JM Smuckers, we probably think of their foods as first, but it's actually third. And then you have international and away from home, which is kind of like a meh segment. Yeah, but essentially, so pretty diversified, I would say. I mean, you don't have any heavy reliance on one individual segment. And then this next chart is basically the net sales by channel. And so, actually, my previous company, I did a lot of analytics for online sales, basically. So, whether it was brand or retailer, I got a sense of like market share across different brands, and I actually led a lot of consumer packaged goods projects. And so, this right here feels very natural to me. So, one thing I'll say is that this grocery segment isn't what it seems like because what we have here is e-commerce here at 5%. But what that might sound like is e-commerce, meaning online sales, is 5%. But I'm pretty sure that's not accurate. I'm pretty sure if you order something online, for example, and you pick it up at a grocery store, that this would be included in grocery. Same thing with Walmart. And so that's why these seem so large relative to e-commerce. So this might sound like a red flag at first. You might say, oh, they don't actually have that much of an e-commerce presence. But I think this might be direct to consumer, which is different than buying something from a retailer. But anyway, enough of that humble brag stuff. So yeah, grocery represents 38%, and then Walmart makes up a massive portion of their net sales at 31%. But after that, it's pretty well diversified. And so just double clicking on their pet food segment, it is also well diversified. So 38% of their pet food segment is in dog food. I'm moving pretty quickly here because it's not that important. So on the coffee, so it's not as diversified in coffee. So 50% is from mainstream roast and ground, which actually saw a pretty nice boost here. Obviously, with people working from home, people are making more coffee at home. And then on the consumer food segments, this one is very well diversified. So the top one is actually peanut butter, which is kind of cool. And then fruit spreads, and then frozen handhelds, and then shortening and oils, etc. So one thing is pretty cool is that peanut butter actually makes up a massive portion of their consumer foods. And if you guys remember, their peanut butter brands is basically led by Jif. So Jif is a very good brand for them. And we won't really take a look at their international and away from home segment. Honestly, it's not that important. What we will take a look at briefly is just cost of products sold. So one thing I'll note is that these are the top 5 raw materials that they spend money on. Obviously, they have to buy these in order to produce their products. And so they would be pretty reliant on the price of these commodities. So coffee and grains, and obviously there's yeah, these are commodities, right? So the prices of them fluctuate, and so that's obviously one dependency, but I wouldn't really worry about it too much. All right, and going back to this criticism, honestly, when I read it again, it almost sounded like just a crazy roast, like straight disrespect. Smucker has poorly positioned brands, even in its more attractive categories, and continued market share losses will plague the company. Like, dang, dude. So it's like that then. Um, so one way to confirm whether or not this is true. All right, and so to confirm this is true, we would have to see pretty much declining sales of their main segments. And we don't actually see that. We don't see declining sales. So this is segment results, fiscal year 2020, basically Q4. So that ends September 30th of this year. So it's actually the most recent completed fiscal year. And so these are the segments that we just talked about. As I mentioned, international and away from home. We're not really going to talk about it's kind of a wash, but basically these are their main segments. And so net sales year over year change. So consumer foods actually saw a massive positive increase in net sales year over year. So that's about 22%. And that's from a quarter perspective. And then coffee increased by 11%, and then pet foods increased by 6%. And when we take a look at segment profits, so that's a 69% increase in consumer foods, 11% increase in coffee, and 14% increase in pet foods. And so the profit margins are actually pretty respectable too. Of course, in order to understand whether these are good or bad profit margins, we would have to look up other companies that are also in foods and in groceries, and then compare those. But just generally speaking, I think close to 30% profit margins on some of these segments, especially with products that require raw materials, I think is pretty solid. So we'll leave it at that. So one thing to keep in mind is actually the criticism that I just read could still be true. Market share could still be losing for James Smucker if it means that people are just buying more of these products overall. Which makes sense, right? So market share is basically like a pie. But if the pie itself is getting bigger, then obviously the sales of these products would also increase. So their criticism could also be valid, right? I'm not completely denying what they're saying, but it's still kind of early to make that claim. I would say that they're losing market share. The other thing that could explain why they're doing so well year over year is actually that a lot of people are pantry stocking because it is work from home. And so that could be why we see such a big boost in coffee and consumer goods because people are just snacking more and buying some of these quick meals more. And so, yeah, we'll have to wait and see how well James Smuckers does outside of everything that's going on. But I guess you could say the same thing about any company, right? Like it's kind of changed the landscape for a lot of different companies. And so I have to give James Smucker the benefit of the doubt here. And so I will say that these increases in net sales and profits and their decent profit margins are actually a plus. And so, yeah, it checks off my box. And so the next criticism that I have is that consumers are shifting away from processed center store categories to healthier, unprocessed, fresh food. And that's going to be a perpetual headwind for Smucker, impeding its progress and making it difficult to carve out an edge. So one thing I do want to add here is that James Smucker, as well as other consumer packaged goods foods, are doing a whole bunch of research and basically R&D spending in order to figure out what the trends are in terms of what people are actually going to be eating over the next decade or two. Like that is extremely important to these consumer packaged goods companies. I can't imagine that Smucker is going to be smacked in the face with any kind of trend that's going to happen. And the other thing I'll say is that there's a reason why James Smucker is placing an emphasis on snacks and snacks on the go. And that's because those types of food are actually more resistant to any kind of healthy trend that we may see in the next decade. Things like packaged dinners, anything that Kraft Heinz sells, probably is not going to be as resistant to any kind of health trends that we may see over the next decade. And then going back to this criticism, which is basically consumers are going to be more health conscious in the future. So what I have to say about this is that I'll believe it when I see it. So I'll believe it when their brands and their segments aren't performing as well, especially their consumer food segments, which, by the way, they actually aren't that reliant on versus their coffee and their pet food segment. And so these kind of headwinds, like I said, I'll believe it when I see it. When I see their brands not performing that well, especially consumer foods, then that may be, some kind of cause for concern. But for now, I don't think it's anything I'm going to be worrying about, if I'm being honest. And so lastly, we can take a look at dividend performance. So they actually pay a 3% dividend yield right now, and their 5-year CAGR is about 7%, which is actually pretty awesome. And then their 10-year CAGR for the dividend is about close to 10%, which is awesome for dividend growth investing. And so I see this as something that I'm buying right now. I kind of looked at all the bearish articles I could before I made this video just to make sure I'm not missing anything, but I'm not really seeing the same things that they're seeing, to be honest. And so to me, it seems like a company that I want to invest in and I will invest in within the next month. So let me know what you guys think, if you agree with my analysis or not. I'm super curious to hear your thoughts. And with that, I will see you guys in the next video.